Good afternoon, and thank you for joining our earnings call. In Q3 FY24, we became the largest Indian operator of offshore jackup rigs with a deployed fleet of 5, of which we currently own 2. This milestone was achieved when rig Virtue 1 was deployed towards end October 2023. In Q3 FY24, one of our rigs, Jindal Supreme, also received contract from ONGC at an operating day rate of $88,859 for deployment on the next contract, which is expected to commence from November 2024. In Q3 FY24, we've been able to improve upon revenue and profitability on account of deployment of all 5 rigs. In coming quarters, our performance will improve further, as has been communicated earlier. I will briefly summarize key financial indicators. On comparison of Q3 FY24 with corresponding quarter of last year, that is Q3 FY23, our revenue increased by 30%, EBITDA increased by 22%, PAT and EPS increased by around 20%. On comparison of Q3 FY24 with last quarter, that is Q2 FY24, our revenue increased by 30%. However, EBITDA increased by 4% with slight increase in PAT and EPS. Whilst operating expenses in Q3 FY24 were expected to increase on account of rental payable and amortization of refurbishment expenses of the 5th rig, that is Virtue 1, which was deployed in that quarter. There were also certain one-time operating expenses which were incurred in the initial stages of deployment with ONGC. At the cost of repetition, I reiterate that these expenses will not recur, and therefore EBITDA margin will improve going forward. It is also important to note that in the 9-month period ending December 22, there was foreign exchange fluctuation gain of 29.27 crores. However, in the 9-month period ending December 24, this amount was only 2.45 crores. If the impact of foreign exchange fluctuation is taken out, then the stark improvement in our performance is evident. This is because 3 rigs have been deployed in this 9-month period at higher operating day rates. I would now like to take you through the presentation. The first slide talks about Jindal Drilling and Industries. We are, as mentioned earlier, the leading offshore drilling services contractor in India's oil and gas sector. We have more than 35 years of experience in the sector of offshore drilling. We are supported by an efficient and experienced operational and management team who ensure that our efficiency is not compromised and we achieve the highest levels of safety. We've been working with ONGC for the past 30 years in the various drilling programs. They are our satisfied customers, and we have always explored opportunities with them. Apart from 5 offshore jackup rigs that we run with ONGC, we also operate 10 mud logging units, 9 with ONGC and 1 with Megha Engineering. We also provide directional drilling services to the oil and gas sector. One of our joint venture companies based in Singapore also has deployed its offshore jackup rig in Mexico on a bareboat charter. Slide 4 details the rigs which are deployed with ONGC on long-term contracts, when they were built and the design that we have. Slide 5 talks about order book of Jindal Drilling as on 1st January 2024. You will note that the order book that we have is around 2,300 crores, which are approximate calculations of ONGC contracts received. The actual order is more or less likely to be in the range of 2,300 crores or above, but this figure is on a conservative side. This order book is indicative of the position that we command in the industry and the efforts that we put in to maintain our market leadership. Slide 6 shows the quarterly highlights of Jindal Drilling. The revenue increase is on account of deployment of rig Virtue 1 in October 23. I have already explained the reason for the temporary fall in EBITDA. Going forward, EBITDA and EBITDA margin will improve, and so will PAT and EPS. The next slide puts out the profit and loss account, and the slide after that provides the annual highlights. The EBITDA mix is also given on slide 9. We can see that the entire EBITDA is largely generated from rig business. That was the trend in the past and is expected to remain going forward. The penultimate slide is the borrowings of Jindal Drilling. Gross debt has reduced from the level that it was in March 23. In December 23, it is at 173 crores. It is likely to reduce to 135 crores by March 24. We are net cash as on 31st December. Going forward, the net cash position will improve further as debt repayment will be on an accelerated basis. Additionally, the loans receivable from joint venture companies are likely to be realized as their rigs are now operating at higher rates. Our shareholding structure is given on the last slide. We are pleased to inform you that a new investor has participated in Jindal Drilling, Bandhan Core Equity Fund, and other investors remain invested in Jindal Drilling. Going forward, we want to improve our operations and try to create as much value as possible. I would now like to hand over back to Kishan and request him to open for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Pritesh from Lucky Investment. Please go ahead.
Yeah, thank you for the opportunity. Sir, from your opening comments on the one-time expense and the rig refurbishment expense, if you could give a little bit more numerical detail there. And second, I was unable to comprehend the QOQ rise in revenue. My guess is Virtue 1 rig which went on the new rate is a part of the JV. So that numbers would have come from share of equity accounted in JV, right? If that's right. So what explains this QOQ rise in revenue? And then the first question of QOQ rise in expense and how much is one-off?
The quarter-on-quarter rise in revenue is on account of deployment of Virtue 1. Virtue 1 is owned by joint venture of Jindal Drilling. So the joint venture gives it on rent to Jindal Drilling. and Jindal Drilling then gives it on rent to ONGC.
Okay.
Revenue received from ONGC by Jindal Drilling is shown in the revenue section. It is owned by a joint venture, and the rig is owned by a joint venture, and therefore the percentage of profit as per the equity share of Jindal Drilling in that joint venture is consolidated below the line.
Okay.
If you look at our results, below serial number 4, there is a share of equity accounted in joint venture companies,
Yes.
Wherein the percentage of profit equivalent to the percentage of equity holding is consolidated in the standalone accounts. There is no change in the consolidated revenue because that's the method of consolidation.
Okay.
On the operational expenses front, since that rig has been taken on hire by Jindal Drilling pays rentals to the rig owner.
Yes.
So that increased the operational expense on quarter basis, which was expected. There is also amortization of refurbishment expenses, which Jindal Drilling incurred in getting refurbishment of this rig between the previous contract and the current contract. That amortization also increased operational expenses, which was also expected. However, what was not expected was the initial deployment expenditure on various heads, which were incurred by Jindal Drilling, because till the rig is accepted by ONGC, those expenses are borne by the charterer, which is Jindal Drilling. So that usually happens towards the start of a contract, and going forward, it will not take place as the rig is operating perfectly with ONGC.
So do you want to quantify what is that amount so that we get a more normalized PAT number kind of understanding for the quarter?
I can tell you that amount. It is around 9 crores.
Oh, so the 32 crore profit which is reported because that JV has moved from loss to profit because it was a de-hired rig last quarter, now it's hired, right?
Yes.
Right. So the normalized profit would be more like 38 crores or 40 crores type number if 9 crore is a one-off, right? And this is more normalized because now your new rig will come on hire, which is Jindal Supreme straight 4 quarters from now.
Yes, correct.
Okay. My just second question is, sir, which is the last question. Will Supreme go for a dry dock? And,
yes, there will be dry docking of Jindal Supreme. We believe Jindal Supreme will get dehired in April 24, and then it will go for refurbishment for a period of 6 months, and then it will get deployed in November, redeployed in November.
Okay. Jindal Supreme's whatever the old contract rate, how much contribution to EBITDA it must be making? Is it a meaningful contribution to EBITDA?
Yes, yes. So the 2 rigs that we own, Discovery 1 and Jindal Supreme, there's no rental being paid to any rig owner because we own those rigs.
Okay.
So they are our largest. Till Virtue 1 was deployed, they were our largest profit center. And now Virtue 1 has also joined that group.
Okay.
Because although it is on rental, it is at a much higher rate than the rate at which Discovery 1 and Jindal Supreme is deployed.
Perfect. And any progress on the shareholder approval that you have taken for one of the JVs, which has Virtue 1 rig?
Right. So we are still desirous of buying rig Virtue 1. We have obtained board approval, audit committee approval, shareholder approval. All sorts of approvals which were within our control are all in place. The only issue that we are facing right now is a technical issue which we are discussing with our lawyers. We've in fact appointed another law firm recently, and we expect a decision to be made within this quarter Nevertheless, we are desirous of buying rigs from our joint venture companies going forward, subject to necessary approvals of whichever entity at whatever level, because we want to consolidate all rigs in Jindal Drilling so that maximum value creation can be undertaken.
Okay. Thank you very much and all the best, Ishwar. Thank you.
Thank you, Pritesh.
Thank you. The next question is from the line of Simranjit from Almonds Financial Services Limited. Please go ahead.
Sir, thank you. Sir, what will be your margins in the upcoming quarters? And secondly, what are the key reasons behind the lowering of margins in quarter 3 of FY24?
I've just spoken about the reason for the temporary dip in EBITDA. It was because of certain operating expenses which are incurred at the time of deployment of the rig, which will not happen going forward as the rig is working successfully.
Okay.
Regarding the margin profile, generally speaking, we should be between a 30 to 35% EBITDA margin.
30 to 35%, yeah?
Yes.
Okay. Done, sir. Thank you.
If you look at our trend, we've been in that range for quite some time, and now that rigs are deployed at higher rates, we should definitely be able to maintain that.
44% was the high. Was the high in the quarter 1 of FY24, if I'm not wrong.
Yes, you are right.
Okay. Got it. Done. Thank you, sir. Thank you. All the best. Yeah.
Thank you. The next question is from the line of Shivan Sarvaya from Humiviction Investment Advisors LLP. Please go ahead.
Hello, am I audible?
Yes.
Yeah, hi. Couple of questions. One is on the initial deployment expenses, so like these mobilization charges. So does ONGC reimburse these to the charterer?
To a certain extent.
Okay. So these would be included in the day rates that you all have published?
We published 2 rates. There is an effective day rate and there is an operating day rate. In the earnings presentation, we mention operating day rates because that's the rate at which billing is undertaken. And effective day rates is a rate which is derived through a valuation of the entire contract as per ONGC's formula. That is what we communicate when we receive the letter of award and submit a notification to the stock exchange.
Okay,
There's
so
a
just
minor difference of maybe of $1,500 to $2,000 between the 2 rates.
Okay, so these would be clean rates, excluding these, as in I mean the ones that are published in the investor presentation would be clean rates without any compensation, etc. from ONGC, right? If I get that right?
Yes.
Okay, fine. And the second question is, what would be the approximate cost, operating cost for running a jackup rig in the Arabian waters, Arabian Sea?
We are not detailing rig-wise days.
No, generally, not for Jindal Drilling, but a general rate, cost that would be there, if you could help us with that.
I cannot help you with that. What I can tell you is that we operate on a 30 to 35% EBITDA margin, which is expected to improve going forward. Other relevant details are in public domain, and maybe you can do a back calculation.
Okay. Thanks for that.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Nihar Shah from Crown Capital. Please go ahead.
Yeah, good evening, sir. Good afternoon, sir. 2, 3 small questions. One was on the opportunities we are looking ahead. Like all our rigs are deployed now for the new ONGC contract. So what are the opportunities we are looking ahead?
Yeah, hi, good afternoon. That's Raghav Jindal. So we have been looking at a few rigs in Mexico and in America, but technically none of them are feasible according to the standards of ONGC or the contract of ONGC that they have currently. We expect ONGC to relax a few of their criteria, which ONGC has spoken to us about and taken the details down. So once they are able to relax a few of their criteria, we should be able to pinpoint the rigs that we want to get into India. Currently, the market seems quite unlikely with the current regimented contracts that ONGC has. So, yeah, that's for new rigs to be got into India. One opportunity that we are definitely going to consider is Jindal Pioneer, which is working with our JV in Mexico. That will end in 2025, the contract, and we should get that back into the ONGC fleet.
Okay. And sir, you guided for 30 to 35% EBITDA for Q4. So what can be a revenue looking like?
Revenue will be higher than revenue will be higher than third quarter because in the third quarter, Virtue 1 was deployed in last week of October. So in fourth quarter, Virtue 1 will be deployed for entire quarter and therefore revenue will be higher. All other rigs are also fully deployed.
Okay, sir. And any guidance for FY25 or 26? Where do we look our company at for top line?
We put out the order book in one of our slides in our earnings presentation with the specific durations rig-wise. So we should be able to significantly improve upon our annual revenue of FY24.
Okay. All the best, sir. Thank you.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Jatin from Family Office. Please go ahead.
Thank you for taking my question. So my question is on the equity JV, which when we were reporting losses here, now this quarter it is turned around. So is it like because of Virtue 1, which you talked about earlier to an earlier participant?
Yes, partly because of that and partly because the other joint venture company is also operating its rig at a higher rate than it was earlier. So both joint venture companies are operating their rigs at a higher rate than they were in previous financial year.
So in terms of guidance on this JV side, do we expect break-even to continue or like it will report?
Yes, it will report profits going forward.
Got it, sir. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Kishan Mundra from Antique Stock Broking Limited. Please go ahead.
Hi, sir. I also had two questions. First of all, regarding, let us say, Jindal Supreme. So in the PPT, I know that you mentioned that you have taken life enhancement capex on the rig. But is there any expiry date when you will have to necessarily scrap the rig? Is there any such clause?
So currently ONGC doesn't have any clause for old rigs. So we just keep upgrading the rigs and keep using them. And this rig has been a star performer for our fleet.
Okay. And if I were to just put a number to the life expectancy to the rig in the current shape and form, would it be 3 years, 5 years? Or there is no?
No, we will be incurring a lot of refurbishment once this contract is done, and the rig can be just made new for the next 10 years.
Okay,
so
understood.
1975 build rig, but it keeps getting upgraded. So, I mean, there's no end life to a rig as long as you are keeping it and maintaining it well.
Okay. So my another question was, sir, there would be strong free cash flow to occurring to you over the next couple of years. So what are your capital allocation CapEx programs, and then the remaining, if you have thought about returning cash to the shareholders in any form?
So debt repayment would be the first, and second would be either to acquire a new rig, or maybe we look at an opportunity if the contracts are feasible to build a new rig for ONGC. We have been speaking to ONGC to get us longer contracts of 5 to 10 years. That it's easier for us to build a new rig for them.
Okay, understood. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Kush Tandon from Ananta Capital. Please go ahead.
Hi, thank you for the opportunity. Just a couple of questions. So, Virtue 1 was commissioned in last week of October. So, even in your expense line item of 101 crore of operating expenses that we have, 102 crores, 1 month of operating expenses are also not there. So, the absolute number of 102 crores will go up next quarter. Is that a fair statement?
It will. On the operational expense front, it will go up, but there was also around 9 crores of one-time operational expenses which we incurred, which will not happen in next quarter.
Okay, so 9 crore was one time. Okay. And, your annual report, you give us the details of rig hire charges, drilling operation expenses, and stores and spares separately. Will it be possible for you to at least give us at least the rig hire charges for this quarter or 9 months for the 9 months gone by?
We don't usually report that. Just to give you some idea, if you're doing a calculation of rig hire charges, one of the rigs that Jindal Drilling operates is taken from another listed company, Maharashtra Seamless. For that rig, Maharashtra Seamless has reported that it gets revenue of $23,000 a day from Jindal Drilling. Maybe that can give you some sense of where we are on the rental front.
Okay, so I am aware of that $23,000 number. Can we use a similar ratio to revenue per day to get a ballpark rental number?
So the rentals that we are paying, Kush, are already in public domain because we report operational expenses comprising rentals and refurbishment. So if you can maybe use that and the various periods in which relevant rig was deployed, maybe that will help you with your calculation. But specifically, we are not disclosing a number.
Sorry, Kaushal, I am not aware where the public domain you disclose it, because in the quarterly numbers it's shown as a one line item, direct cost.
So that's what I was saying, that one line item, if you can align that with the relevant period in which a particular rig was deployed, because it's the first time in which all 5 rigs are deployed. So maybe earlier periods, and then that can give you a better sense. Generally speaking, we will maintain 30 to 35% EBITDA margin, and going forward, improve upon it.
Okay. And, I just missed last participant's question on share of loss or profit from associate. So we've done some break-even this quarter. Is it expected going ahead also?
Yes.
Okay. Thank you and all the best.
Okay.
Thank you. The next question is from the line of Nagraj Randrasekhar from MH Capital. Please go ahead.
Hi, good morning. I was a little late to the call, so this might have been covered, but could you give us a sense of the refurbishment timeline, cost, and when Jindal Supreme will be deployed on its contract?
It will take around 6 months. Jindal Supreme will get dehired around end of April. Then it will get rehired on the new contract in November. In that 6-month period, the rig will be refurbished. The expenditure incurred will be significant, but we are not disclosing that number.
Got it. And broadly, as it is an own rig, and we know the day rate close to 87,000 minus the small portions net of write-off that you mentioned, we should be seeing roughly a sort of 60 crore quarterly bump to EBITDA ballpark from the third quarter onwards or maybe the fourth quarter onwards on a full quarter basis in FY25. Is that a reasonable sort of estimate?
We've given the revenue out and we've given the EBITDA margin. You can do your calculation with those figures.
Got it.
In order to address this query, we had preempted that and provided the entire order book of Jindal Drilling from 1st January 2024 onwards, rig-wise.
Got it.
It is there in the earnings presentation. If you can take a look at that, and that will give you a better sense.
Got it. And just the spot rig rates continue to hover around the 100,000 levels, which would be relevant for our rigs which are coming up for renewals in 24, 25, and 26. Does that still remain the case?
Yeah, so if you see the last few contracts, ONGC has not been able to get all of its rigs that it wanted. So it was still short. It had a shortfall of 4 rigs. The prices in the last contract were touching about $1 lakh. So we do expect the rig rates to further increase with the coming contracts. So hopefully the next few contracts that our company will get also would be at a higher rate.
Understood. And just for the investments we might do with the free cash, you mentioned a few options. When we look at doing these, what sort of payback periods do we keep in mind? Because my understanding is a new rig costs around $250 million and has its time before we get hands on it. And at a $100,000 rate, that's a 9-10 year payback period roughly. What would be the payback period at most that you would be looking for new investments?
So yeah, a new rig would cost us between around 250 to 300 million. Depending on what the current rate that we get it at will depend upon the payback period. And usually it takes about 2 to 2.5 years to make a rig.
Got it. And how much can you take as leverage against it broadly, and how much will you have to put?
We will have to work on that. I mean, I'm not too sure what the market is currently because for a while rigs were not being made.
Got it. Thank you so much.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. As there are no further questions, I would now like to hand the conference over to management for closing comments. Over to you, sir.
Thank you, shareholders, for participating in the earnings call. We appreciate your interest and we are committed to creating value for everyone involved. We are also started communicating with various interested individuals and institutions by starting an investor relations function in Jindal Drilling. Recently, we've received a contract from ONGC for our rig Jindal Supreme at a rate which is the highest of all the rigs that are currently deployed by us. Going forward, our rig Jindal Explorer, which is currently being operated, it will come up for renewal and we expect good rates in that contract as well. We wish to grow Jindal Drilling to much greater heights, for which a lot of work is being done in the background. which will be communicated in due course. I would also like to thank Kishan from Antique Stock Broking for organizing the call. Finally, I would also thank Mr. Raghav Jindal, MD, for taking time out from his schedule and would request him to give his closing comments. Sir.
Thank you so much, investors. Great speaking to you, and we definitely hope to see you sometime very soon, and we definitely have a very positive outlook towards the company and the oil sector. Thank you.
Thank you. On behalf of Jindal Drilling and Antique Stock Broking Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.